Time now for the markets with Leighton. And what will corn prices do this year? It's a bit of a guessing game, you say?
Analysts seem to be a little more confident talking long term and what the outlook might be as opposed to, say, the next 10 or 11 months. Also ahead this week in the markets, retail trends look good for chicken. The cattle on feed report is described as friendly, and the stability of old crop soybean prices may be at risk. An equity analyst with J.P. Morgan said this week that trends look good for chicken processors. Ken Goldman says retailers' margins from selling chicken are still good, even though prices are up. That means the stores are likely to continue to be willing to pay up for wholesale chicken. Goldman says he thinks chicken prices at retail are still attractive compared with red meat prices. All in all, a positive outlook for poultry processors. Meanwhile, the pork sector should also be well supported now, according to most analysts. Following an upturn in futures in the last couple of weeks, pork is well positioned at the retail meat counter, according to analyst Tom Fitzenmeyer.
I think you're going to see those February hogs move back up into the 90-cent range. They kind of bottomed out, reversed, should be well supported. The weakness in the yen, I guess, maybe concerns me a little bit because a lot of that pork does move into Japan. But I think that you're going to see that well. Like I said, it's positioned, pork's positioned fairly well at the retail level in the U.S., and I think you're going to see it hold up fairly well. And like I said, we had a reversal this week, probably going to move higher.
Traders watching the fat cattle market were given some new information in the last week. The monthly cattle on feed report was released in Washington by the USDA. Extension Ag economist Dr. John Michael Riley joined me for an interview at midday Thursday after reviewing those numbers. John Michael, what are your initial impressions of the cattle on feed report?
Well, the report was definitely a bullish one. The number of cattle on feed, January 1, just a little over 11 million head. That was about a 5.5% drop from a year earlier. The industry was looking for about a 4.5% drop, so it beat expectations in terms of it was more bullish than expectations. And then the placement number was really where the true bullish sentiment came in, the fact that placements were mostly steady with a year ago, but trade was looking for that to be about a 4% increase. And so those two collectively really just helped buoy prices on Monday when the markets opened back up. And overall, the report was very friendly to markets.
As we look a little bit broader as far as the beef sector here, we got some encouraging news out of Japan, relaxing some restrictions on our beef.
That's right. That news came out Monday when, again, the report came out on Friday. Those two collectively, the report and this news from Japan, where they're going to relax the restrictions, allow cattle 30 months or younger to come into their country. That was just added fuel to the on-feed report. So both of those collectively really helped put the market higher.
Now, by the time our viewers are watching this, we will have had another report come out, the cattle inventory report. What are you expecting that to show?
That's true. A lot of news to talk about. Trade is looking for total number of cattle in the United States to be down about 1.8%. Beef cows down 1.5%. So a continually reduction in the beef herd and the cow herd, largely due to the drought that we continued to see in 2012. One number that everybody's looking to is heifers kept for replacement. Last year we saw that jump up just a little bit. They're not looking for that to increase, actually going to be down 0.4%, but the range of those estimates is all over the board. So that's going to be the number I think everybody's looking to.
And as we leave here, as far as consumer sentiment and the picture there and with competing meats, how are you feeling that market going?
It doesn't look really good because you saw this big jump on Monday because this good news for the industry. But since then, things have cooled down. I think that's largely due to just a lot of uncertainty about beef demand as we've come into this tight supply situation in 2013.
Our trivia quiz this week deals with wood and the fact that forest products are such an integral part of everyone's daily life. Here's the question. How many pounds of wood does each person use per day when you consider all the products that have some component of wood in them? Is the answer 2 pounds or 4 pounds, 6 pounds or 9 pounds? You'll find out here in a few more minutes. Poultry Perspectives, an extension publication in Maryland, has brought forth an analysis from the grain sector that's apparently shared by many traders around the country right now. The Maryland economists are of the opinion that U.S. corn prices could fall as low as $4 per bushel if there are timely rains this year. On the other hand, with a persisting drought condition In some parts of the country, a lack of rain this year could push corn to $10 a bushel. Now, longer term, the Mid-Atlantic economists say they are confident grain prices will decline over the next 5 years. Welcome news, of course, for poultry and meat producers. As for the soybean market, as we cross from January to February, some analysts describe themselves as antsy when it comes to old crop beans. Analyst Elaine Cubb says, in fact, the old crop is in what she calls a precarious position.
And when you talk about South America, within the next couple of months, all of this export business from China is going to be directed in their direction. So I think there's a limited time frame for the U.S. soybean market to be very bullish. And I'm always very concerned that on any given day, China could certainly come in here and cancel it and put another big cancellation in. And that could certainly drive these markets down 40 cents in an instant. So I think the soybean market, the old crop soybean market, is in a very precarious position. They don't have quite the same supply and demand situation that corn does, and there's certainly these opportunities for the export news to go away. So I don't like holding on to beans anymore.
Before this week's feature story, our trivia answer is next, and this week it is C. Each person uses about 6 pounds of wood per day, according to Extension Forest Product Specialist David Jones.